Welcome to the Real P&L Trading Show, where I trade and I share my real P&L on 3 accounts and share my proprietary SafeWhale options trade system for free. Um, Sometimes my audio doesn't work. I'm not sure. Always want to check my audio, so you guys let me know that you can hear me okay, and I'll just move on as if you can hear me. Uh, and also be sure to post any questions you might have about any of the trading systems I have or anything about options in general. I'll answer your questions there. Richard says, audio good, Bill. Thank you. Audio good. All right, great. All right, so the first thing I'm going to do is talk about the earnings edge. What happened last week? Really, nothing happened last week. Nothing. There's not a lot of companies going into earnings, and therefore there are times when the none of the stocks actually fit through all the filters, because I have very specific filters before I would trade. And so nothing fit through the filters last week. So I did not trade anything. But you can see my P&L right here, $9,572.36 on this particular account, my Earnings Edge account. I started this account with $5,000 back in January 2022. So it's been a couple years now that I've shared my P&L every week with that trade. Let's take a look at the stats on that. I did an update in 2022 in October. I did a tweak to the system, and since then I've had 16 wins, 16 losses, 6 break even. So basically 50-50 win rate. But my average win is 867, average loss 480. So if you have a 50-50 win rate and you win higher amount than you lose, you can come out ahead. So in 2022, did 63% versus minus 20 in the S&P. And then this year, up 17%, and the S&P is up. Let's see, what is SPY trading? SPY is trading at 471.59. It's up pretty good, 471.59, 23% this year. Wow, so the S&P is up pretty significant, 23%. I think at the end of October, it was kind of struggling a little bit, and then it just skyrocketed up higher since November 1st. But if you can look at the overall totals with the earnings edge, I'm up 91%. The market is still down, barely, from January of 2022. So it's taken 2 years to recover. You know, it's only 0.5% off of its highs from late 2021. So pretty much it's recovered, but it took about 2 years to get here. So that is the earnings edge. That's my last trade. I didn't do that last week. That was a couple weeks ago. I traded Costco. Okay, so earnings edge. So let's talk about the Premier Level 5. Make sure I got everything in here. So my Premier Level 5, my account is at $35,026 or $76. It keeps oscillating. Let me put that in. But you do see my real P&L there, 35,026. That's down pretty good from last week. When the market keeps going up higher and higher and higher, remember I have a hedged portfolio. So sometimes when the market keeps rising faster and faster, that the hedges, put a little bit more of a drag on the portfolio. So the up markets aren't quite as good for the PL5, but then when you go sideways, it really outperforms. When you go grind down, it really outperforms, and a crash, obviously, just vastly outperforms. And when you have those lower drawdowns, that's when you can come out ahead overall. Now, my record here is I started trading this on April 8th, 2022. I got 23 wins, 7 losses, 10 break evens, and 4 open trades right now. You can see that since April 8th in 2022, outperformed about 12% versus minus 6. Underperforming this year, 4.3. Versus 23, underperforming based on a nominal basis, but it's only about 1/4 the drawdown. So you can multiply this times 4. So still underperforming, probably around 16-17% versus 23% on a risk adjusted basis. So the market's really screaming up higher this year. Um, the PL5 since April 8th is actually still outperforming, but not by a lot. Basically, just almost even on a nominal basis. But again, risk adjusted basis, vastly outperforming because the drawdowns are only about 1/4 of the S&P 500. One of the things that some of the people do is they will actually go long the market and do the PL5 on top of that. And they can use about 85% of their capital to trade the PL5 and be long the market at the same time. Some people do that. That's called profit stacking. I'm not sure if you've seen one of my latest videos on profit stacking and how to use span and portfolio margin. If you go back through my channel here the last couple of weeks, and I talk about how you can basically kind of double down. It's almost like, I'm not going to say free, but free money. So you use 85% of your money to trade the Premier Level 5, and then you have another 100% of your money that's long the S&P 500. And so you kind of kill two birds with one stone, and you're not using any margin. You're not paying any margin. So that is one way to, combat when the market's going up significantly higher. You actually are long the market and you trade this on top of it. But I don't like to do that personally. So I have these numbers here. And I'm okay with that. All right. So that's Premier Level 5. Let's talk about the safe wheel. And we're going to trade, because I always trade on Mondays. The safe wheel. I started this account with $5,000 back in January 2022. I've got 6,371 in the account. Let's see here. 6,371. You can see how the safe wheel did. I get about half the drawdowns of the S&P 500 with the safe wheel. So on risk adjusted basis, it does better. Nominally, 2022, 21% versus minus 19. Vastly outperformed here. Now on this 5371 year to date here, let me look at my 6366. That's how much I have. 6366. Okay, so far this year, safe wheel is up 4.6%. The S&P again just racing higher. This one you can kind of, on a risk adjusted basis, you could double this, so maybe up 9%, but still underperforming for sure this year. But overall, since I started trading the safe wheel live in front of you with real money, I'm up 27%. S&P again just about break even from that time frame. So yes, the safe wheel is vastly outperforming, especially if you were to do a risk adjusted basis. You could kind of multiply this times 2. So safe wheel still outperforming since January 2022, but not this year. This year is not outperforming, but if you take cumulative, vastly outperforming. All right, so let's talk about what am I going to do with the safe wheel. I've been making all these trades right in front of you since January 2022. Now, I say that, but let me get into here. Here, the long call that I put on, I do those on Fridays, and I spend about $5 every Friday on a long call. You don't see me do that. I don't come in and do that live, but you can see the results right here of what I did last Friday, where I owned the $40 call that's going to expire this week. I got it for $6. It's currently worth $4.50. So I do trade that one every Friday. You don't see me trade that live, but you see me trade the bulk of all the rest of the system on Mondays. And so let's see, where are we now? I own 100 shares. I got assigned at $37.50. It was a couple weeks ago. And I also have my put hedge, which has 151 days left. So the first thing I'm going to look at is my put hedge. And this here, if this was under 100 days, I would renew it because it would have too much depreciation. But it's at 151, so that's good. Then I want to make sure that this put, this strike price, this $28 strike price is reasonably within the price of the underlying DKNG. In other words, within about at least 70%. So if I take 35.78, 35.78, and I multiply that by 7%, or 70%, it's 25. So this strike needs to be at least 25 or higher in order to be close enough to give me good protection. And it is. It's 28. So I checked number one here, good on days, and number two, it's close enough. So this put hedge stays intact. I don't need to change it or do anything with it. Now, I've got my long call, which is protecting this put hedge. So I've got a hedge protecting the hedge. I'm pretty well hedged. And then here now I'm running the traditional wheel at this point. I am long 100 shares. So I'm going to see if I can sell a call at 37.50 or further out of the money for at least $36. So let's see what I can do. And I want to do it in the one that expires this week. So I'm looking at the calls. The puts are over here. I'm looking at the calls. 37.50. Okay, so I cannot get enough premium. If I was trading if I got assigned at $37, I would sell this and I would have enough premium, but I do not have enough premium here because it's not over. Well, this one actually wouldn't be enough either because I want to get at least around 35, 36 cents, and I am not able to get that. So I am not going to sell a covered call because I cannot get enough premium. So what I'm going to do now is open up a second layer, and I'm going to get short 200 shares now, and I can do that because I'm hedged. And what I want to do is I want to go out of the money, and I want to get at least 35 or 36 cents. So I can't do the 34.50, not enough premium here. So I'm going to go to the 35 where I can get enough premium. I'm going to sell one of these. I'm going to sell one put. So I'm basically going short 200 shares at this point. Let's see, mid price 45. Maybe I'll try to get 46 for it. So I'm going to sell one of these. And as far as it filled right away. Okay. Okay, good. So I filled there, got $46. I am currently long. I'm sorry, I said I was short 200 shares. I'm actually long 200 shares. So I'm long 100 shares here, and being short this put makes it to where I'm basically long 200 shares at this point. But I'm also long 300 shares of a hedge. I will not do any more. I won't add to this position. I won't be long 300 shares. I won't do that. That's the most I'll do is long 200 shares here, or being short this put is equivalent to being long another 100 shares. Now, as far as sizing, I have between $5,000 and $10,000. I'm trading a stock between $20 and $40, and I'm using a margin account. And so I will do one of the traditional wheel, and I'll do 3 put hedges. That's the sizing. If I had $10,000 to $15,000, I would be doing 2 of these and 6 of these, and then for every $5,000, I would be adding to that, sizing up. Okay, so see if there's any questions. Make sure I got everything there. All right. Bill says, good morning. Good morning, Bill. Audio good for Richard. Good morning. First time here. Just bought the Safe Wheel last night and haven't started the course yet. Great. Yeah. So if you want the fast tracks of the Safe Wheel, so there you can watch me trade the Safe Wheel and you can learn how to do it. Or if you want the fast track, you want all the rules put together right in front of you, and everything done simple, make it real simple for you to learn it. You can get the fast track and you can get the actual course. And there's a link in the description, of course, for that. You were speaking already when the session started. Okay, good. Thanks for letting me know that. Maybe I'll delay what I say for a few seconds when I start the broadcast. Good morning. First time here. Yeah. It's good to see you here. Fraternal House. Which trading platform is this? This is Thinkorswim, Toss. It's the one that I prefer. I'm actually going to be putting out a video probably this week on trading platforms and my take on trading platforms. And I've been trading since the mid 1990s online. When I first started trading, the platforms were like trading on a spreadsheet back in the 90s, but they're much better. But Thinkorswim is my favorite one. In fact, I'm even willing to pay higher commissions to use Thinkorswim, even though I probably don't want them to know that. But now it's owned by Schwab. So what's cool about that, actually, I was thinking, are there any advantages or disadvantages to Schwab? But there is an advantage to Schwab, and that is anyone that can get Schwab, now you can get it outside of the United States. If you get Schwab, which you can, then you can get Thinkorswim outside of the US. So actually, there is a big advantage to Schwab buying Thinkorswim. Now, you have to check with your individual country of where you live, because they have certain guidelines and rules on whether you can get portfolio margin and span margin and things like that. Fraternal House, hit the likes, people. Thank you. Appreciate that. Yes, please do hit that like button. So you only average 6 trades a month. That depends on this. Probably. I haven't really counted it, and I'm assuming you're talking about the safe wheel. You're probably, yeah, if you're talking about the safe wheel. Or maybe for the Earnings Edge. No, I don't do that many trades. For Earnings Edge, do we need to sign up for the class or the alerts to learn the strategy? The course, you would need to sign up for the course to learn the strategy, but currently the card is closed for that. I only like to bring on so many students at a time so I can make sure that I give them the attention they need. So currently the card's closed, but you can get on a waiting list. That way when it opens, you can be the first one to know about that. There's a link in the description. That would be the best way to go if you wanted to learn this and be able to trade it on your own for the Earnings Edge. Less is more. You mentioned others are stacking on the PL5 by going long the market. Are others doing this by simply buying an index fund or doing it using some sort of long option structure on the market? Just buying an index fund. Just, in fact, you can buy any combination of stocks that you want, or you can just buy the SPY, or you can just buy the some index fund. And then typically what they'll do is they'll margin you, if you have portfolio margin or span margin, they'll margin you about 15%. So now you have 85% of that capital left over to trade the PL5. So you can be long the market and trade the PL5 at the same time without paying any margin expenses. Jeff, when comparing performance as a safe wheel versus S&P, are you assuming buy and hold the S&P versus safe wheel? Yes, I am assuming that. Wouldn't S&P holders be executing a strategy too, like selling covered calls? Selling covered calls, here's the problem with that. Let's say you're long the SPY, you're long the S&P 500, you're selling covered calls. There's only about, I don't remember the exact stats, but let's say 4 days out of a year where you might make 50% of the upside of the S&P 500. So if you're not long those 4 days, and don't quote me on the 4-day thing, I don't remember what it is, 6 days or whatever it is, every year it's different. But if you're not long those specific days, you lose almost all of the upside. If you sell a covered call, you're capping that upside. You're not getting all of those returns that you would if you weren't selling covered calls. Covered covered calls are not, they're not really the best way to go because you cap your upside. That's the problem with the wheel strategy too. You cap your upside, and those 4 days or 5 days out of the year where you make like 50% of the money, you don't get that. So I don't like that strategy. Fraternal says hit the like button. Thanks. He says we need 10 more likes. I appreciate that, man. Let's see here. Sweet Bear, you need a minimum of 25,000 outside of the country for toss. Okay. So probably depending on where you live, you have specific rules. And I don't know if that applies to all of the countries, but I'm sure it applies to where you are. And maybe that is a general rule. I don't know for sure. But you can get tossed now, Thinkorswim, outside of the US. Carrot says, what conditions hurt the safe whale? Well, it looks like the crazy bull market that we're having is not too good for the safe whale. I mean, the safe whale's underperforming this year, and the market's just up like 23 or 25%. So maybe it's that super bull market. I haven't ran every specific scenario. I know that the safe whale will do fine in a sideways market. I'm sure it'll do fine in a grind down, and it'll be fine in a crash. So, you're probably underperforming in the bull market, and we can see that happening this year. Devin, I know you've answered this before, but is there any strategy that you could teach if you do not have a $5,000 account? No, I mean, not really. I would just learn. I would go into learn mode and then try to get my account up to $5,000. So I would just learn about options, learn everything I could, and just sit on the sidelines until I could put enough money away to get it up to 5,000. That's what I would do if I did not have $5,000. And I don't have anything specific for that except for, a free course of how to trade options. And that course is being worked on. I'm revamping it. It's really going to be nice. It's coming out soon, the updated version. Less is more. All these watchers, only 2 likes. Come on, hit the like. Okay, thanks, guys. I appreciate that. So sweet. Oh, so I know Canada and Singapore need 25K. Okay, good information. I did not know that because I didn't get into every specific. When I did all the research on I went over 7 or 8 different brokers. I didn't get into the details on Thinkorswim, like that much details, but it looks like Singapore and Canada, 25K. Okay. But at least you can trade Thinkorswim. It's really a much nicer platform. It does a lot. So I really like the platform. Okay, I don't see any more questions. I always like to kind of talk slow here because somebody always kind of throws in a question here at the last second. I think we're on like a 5-second delay. So see if there's any other questions coming in. Yeah. For Singapore, you need to be an accredited investor to use TOS. Okay, interesting. All right. I did not know that. It's good to know. And James, for those that wonder, I have several calls come into the money, and they did help a bit with the crazy runs. Yeah, interesting. So I'm assuming you might be long, for example, the market or S&P, SPY, and then you had your covered calls, and the market ran up so high that your covered calls went into the money, and so your returns got capped when that happened. Yeah, not surprised there. Okay. Well, that is all for the broadcast today. I do always like to say one thing before in parting. If the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys.